Good afternoon, everybody. Welcome to the Moving Markets Podcast. It is Monday, August the 25th, 2025. We are officially into the last week of summer trading, last week of the month of August. We've got this week to trade, and then markets are closed for a 3-day weekend. And then when we open back up, we are September 2nd, and technically speaking, we're at the end of summer. And it's going to be fun. It's going to be a fun ride. I can't wait to see what this last part of the year brings, fall and early winter. I am recording this with about 10 minutes left before the market closes. So probably I've got enough stuff to cover today that probably the markets are going to close before I finish this. As of right now, and this has got, when the markets are open, this has a little bit of a delay. Let me refresh right now. I've got my computer in front of me. I've also got a TV screen in front of me, and they're only about $5 off right now. I show the Dow down about 318. The TV says 326. S&P down 17. NASDAQ up. This says 7.9. TV says 6.7. So there's a little bit of a delay on this. Nothing real spectacular. It's interesting that the NASDAQ is up even a little bit because almost, I think with the exception of two Dow Jones Industrial stocks, everything else on the Dow is down, I believe. I was looking at the Dow 30 stocks, and only Nike, which is up 1.25%, 1.33% almost, and Nvidia, which is up 1.6%, they are the only two out of 30 companies in the Dow that are trading in the green. You would think with that much of the Dow, and the reason I mention that is sometimes in the Dow Jones Industrial Average, one or two really heavily weighted stocks, something like a Microsoft, which trades at $505 a share, something like Caterpillar at 433, Goldman Sachs at 739. If one or two of those companies is trading down, it can bring the entire Dow Jones Industrial Average down, and you could have 60 or 70% of the Dow stocks trading to the upside with just a handful of those heavily weighted ones. But today, it's almost all of the Dow Jones Industrial Average trading at least a little bit in the red. I guess what's keeping it from being a much bigger sell-off is Merck, which is one of the lightest weight. I think Cisco might be the only, Coca-Cola, Cisco, and Nike trading at just under $80 a share. Those are the only Dow components that are lighter weighted than Merck. And Merck is down 2.25%. That's not like a crazy, wild, massive drop. Overall, the Dow is only down about a little less than 0.75%. So, 315 looks like a big number, especially for those of us that have been trading for 15, 20, 30 years. We look at a number like 300 and something, and that used to be a massive, massive movement on the Dow Jones Industrial Average. But now a move of 0.5 to 0.75% is barely newsworthy, unless it's the 6th or 7th or 10th day in a row that it's having that kind of a move in one specific direction or the other. So we'll see what happens in these last 8 minutes that the market has to trade. The NASDAQ is just managing to stay barely positive because Nvidia and a couple other stocks that are also included in the NASDAQ are trade. Well, there you can see the NASDAQ just went negative, but only by a fraction. You might see, I guess we might see a little bit of a sell-off here in the closing minutes of the market. But Nvidia is still up 1.5%. Tesla's up 2%. Palantir, which was way down earlier, they were down, I want to say $7 or $8 a share early on in trading. Like almost 5% down, 4% down. They're only down $1.25 now, which is about 0.75%. Home Depot was down more than it is right now. We're getting out of NASDAQ stocks right now. But even Meta started the day really trading to the downside and is only down 0.12%, so 0.1% for Meta. So it's an interesting day. Everything right now, at least today, tomorrow, everything is gearing up for what happens with Nvidia when they report their earnings on Thursday after the close of trading. Nvidia, I think, tomorrow or Wednesday during the day is going to test this all-time high of 185. I think you're going to have more people interested in maybe getting into Nvidia than those getting out. But Nvidia is kind of priced for perfection. They've got to have a perfect number. They've got to thread that perfect needle, or pitch that perfect game where they've got good numbers on their revenue, good numbers on their earnings per share, and they're going to have to guide strong. They're going to have to make some very positive commentary about what they expect to have happen in the next couple of quarters to a year. A lot of focus is going to be on how things are going in China as it relates to Nvidia, and by that stretch, by that measure, all of the chip makers. Oddly enough, AMD has taken a pretty good hit today. Microsoft taking a little bit of a hit. You've got some other companies that are in ways closely tied to Nvidia. AMD more specifically than Microsoft. Palo Alto Networks, they're taking a little bit of hit today. But we'll see what happens. Nvidia is probably going to post good numbers on the top and bottom, and the evidence of that is that the big companies that they supply with chips here in the United States have all reported good earnings and have all spoke highly of their AI business. And AI takes a massive amount of computing power and computing speed that NVIDIA chips provide. NVIDIA is right out there at the forefront of providing these chips that make AI possible. Microsoft, Google, Amazon, Apple, the list goes on, Meta, these companies have all reported good numbers and all spoken highly of their AI business going through this most recent earnings report. And that speaks well for NVIDIA. So NVIDIA is probably going to report really good quarterly numbers as far as revenue and earnings per share. But the big key is going to come down to what do they see in the near, medium, and long-term future. And that will most likely determine whether NVIDIA can move up farther or whether they could have really good numbers and still have it not be enough to impress investors to the point where they see another leg up in their stock. We just put on a new trade. Hopefully by the time you're listening to this, you've seen the new trade that came out. Maybe you had a chance to get into it today. If not, try and get into it first thing in the morning. But we added a long iron condor to NVIDIA on the high end. 187.50 is where we would need it to go to guarantee max possible profit if NVIDIA takes off to the upside. But it will only have to come down to 172.50 to guarantee us max profit on the downside. And I think the downside will be an easier reach. If NVIDIA does anything to disappoint, I think it'll come right down quickly and test 170 and maybe come down and test somewhere here around 160 within a couple of trading days. If we look at, let me quickly add in here the 50-day moving average for NVIDIA, and let's take a quick peek at where that's at. 50-day moving average down there between 165 and 170. And I think if there's any kind of a miss or a perceived miss, and a miss doesn't have to be coming in with worse numbers than what the analyst expectations are. A miss could be just NVIDIA did not impress enough to really see it take off. And a move down to this 50-day moving average, in this particular case, it doesn't coincide with what I would call the strongest level of visual support. I see that down here around 160 or a little bit stronger support line at 170. But you got to believe it's going to come down at least down to one of those two numbers if it misses. And I think it will easily do that before the close of the day on Friday. So if NVIDIA hits, if they hit a home run and those numbers are perfect and their guidance is enough to impress investors, 187.50 is not a stretch. That would be a new all-time high, but it's not going to be like this horrible, ridiculous stretch for it to hit there. So that's the new trade we put on. Now, I did not send it out in the newsletter. I did not send it out in the email that went out with the newsletter just a few minutes ago. But NVIDIA, we have an open trade on NVIDIA. And that open trade is a longer term calendar spread. Let me go to this one. There it is. It gave up a little bit in this recent little pullback by Nvidia. Our spread gave up a little bit, got some back on Friday, getting a little bit more back today. The reason I have not sent an adjustment or a close order on Nvidia is because I think probably this trend from Friday and today continues into tomorrow. And I think before the end of trading tomorrow, Nvidia is probably testing their all-time high up there around 185. And what I'm inclined to do, and I may change my mind on this, but what I'm inclined to do is get out of Nvidia and take the profit we have on the longer term spread trade at the open of the market on Wednesday morning, depending on what it does tomorrow. I may change my mind and decide that it would be worth adding some additional long puts or doing something in the way of a synthetic collar trade. But we've had such a great run with Nvidia. It might just be the ideal time to close that trade, try and get some profit out of this long iron condor. And then, if there's a pullback on Nvidia, we get back into a longer term trade once we see a bounce and see it moving back up with technical crossovers. That might be the smarter, safer play on Nvidia. So that's what we're probably going to do. Market's close in about 8 seconds now. We're getting right down to the wire, and it looks like the Dow's going to finish down at its session low, unless it got a lot lower than 344 during the day when I wasn't watching. That's unfortunate. Literally in just the last 5 minutes of trading, I saw the Dow move to where it was only down 280 something. Let's look at this one day and you'll see it took a dip down. I don't think this is reflective of where it's actually closed. I think we'll get an update on that in a minute. But it looks like maybe 349 and some change is going to be the closing price today. But it tried to make a little comeback. And then in that this is literally less than 5 minutes that it just plummeted down to its session low. I'm not sure what caused that. Something spooked people and made them jittery, or there were some automated orders in place. After being up in the 1.6, 1.7% range most of the day, Nvidia closed only up about 1%. So maybe that was a good portion of it. Interesting. I mean, when I'm doing a podcast like this and it's happening live, it's hard to tell what might have caused. And look at the NASDAQ. The NASDAQ. Remember, I started this podcast 11 minutes ago, and the NASDAQ was positive. And a couple of times today, the NASDAQ was as much as 30, 40 points positive. And again, look at that. I would love to know what created this. That is literally a 5-minute plunge. At least with the NASDAQ, that's not down to its lowest point of the day. But wow, just a late last second sell-off. We might have to explore that more tomorrow when I have some more information on why it did that. So that's where we're at with that. Okay, got to talk a little bit about Meta. At the end of the week last week on Thursday, we rolled Meta, our Meta in the money bull call. We rolled it out a week. Now, if we had a crystal ball, we wouldn't have done that, because by the close on Friday, and I'll get my little crosshairs in here, by the close on Friday, guess what Meta did? They closed at 754.79 and were more than high enough for our trade to have achieved its maximum full possible profit. Unfortunately, we didn't have that crystal ball, and Meta started the morning on Friday down around 740, and then it started getting momentum after Powell's speech, and it just kept going and finished well above 750. We would have made our full target profit. We had to spend about 45 to 50 cents to roll Meta out, and it's good that they were not down. They went down a little bit at the open this morning, didn't get hit too horribly. And we're down a little bit on Meta right now, but this will change quickly. I believe Meta will stay above 750 for a couple more days, and we'll have a fairly easy exit on this trade. I think this sell-off on Meta from the 780, 770, 790 range even, down here to dip as low as 730 a couple times, I think it was kind of an unnecessary, exaggerated sell-off, and I don't think there was a lot fundamentally behind it. And that's why I think Meta will more than likely jump back up a little bit in the next couple of days. And you know, based on what Nvidia reports tomorrow, it could be a big, massive jump. So with the Meta trade, we're probably going to get out as soon as we have some profit in the trade. I don't want to stay in the trade and risk that Meta dips a little bit again. So probably when we get to a little better than break even or even a little bit of profit, we'll exit that trade. Our Palantir trade is down a little bit, but I am so long-term bullish on Palantir. I know it's had a rough Palantir has had a rough couple of weeks. It's given up quite a bit in a couple of weeks. But I'm still so long-term bullish on Palantir. Look at where it's closed the last 4 trading days. It's managed to just close and set up some pretty strong support, in my opinion, right there at that 50-day moving average. And I don't think it's going. I mean, it did temporarily a few trading days ago dip below that 50-day moving average, but on that day it closed well above it, and each close it's had has been higher than that 50-day moving average. That bodes well for some support right there. You know, again, as goes Nvidia, so may go Palantir. We'll see what happens on Wednesday, but I'm long-term bullish on Palantir, so I'm not changing our position on Palantir anytime real soon. CrowdStrike reports next week. This is an interesting one. I hate that we're down. I hate that we're down as far as we are in CrowdStrike, but I still think there's a really good chance that CrowdStrike comes back. I don't see CrowdStrike having a second quarter in a row like this one. I really think CrowdStrike is poised to turn the corner and go back up. I think they've been beat up so much that expectations are going to be lower, much lower. And I think it's not going to be hard for Palantir to beat those expectations and go bullish. So we got plenty of time still in the trade, even from the earnings report next week. But it's going to be a really close, you know, it's going to be one that we're really going to have to watch close and maybe make an adjustment of some kind before the earnings. So that kind of brings you up to date on our spread trades. Triple play, look, I admittedly, I am way behind on updating these triple play trades in the spreadsheet. I will work on that today and tomorrow. We were able to get out of Dash with much less damage than what we earlier had. We've rolled Tesla a couple of times and are actually looking much better on Tesla. AMD and Microsoft are for sure down right now. We actually hit a home run with PA&W. And the 2 trades we put on at the beginning of last week, one filled and one did not. And one we made our full profit on, and the other one, since we didn't get into it, didn't do anything. But I've got to get this updated, and I will do that. It's been a rough couple of weeks, maybe a rough few weeks with some of our triple play trades. We're still overall at a pretty nice profit on the year, but I feel like we should be much better than we are. I think we can get some back on AMD and Microsoft still. I'm optimistic that we can get some back on those. And like I said, the loss we took on Dash was much less than what it would have been had we not made a couple of adjustments. So we're looking good on that. I'm also a little bit behind on updating collar trade stuff. And with the collar trade stuff, we've had some short options expire and some long options expire. I'm going to get there will likely be a number of adjustments to collar trades this week to kind of get us more prepared for the next month or two. So watch for that in the coming days. And with that, I think I will wrap up. Tomorrow morning, we'll talk more about where we're at with the new Nvidia trade, because I know some of you will not get this in time to have gotten into the trade today. I did get filled on the trade today. I am in the new Nvidia trade. And so we'll go over that. Tomorrow morning, let me go back. Let me back up on one thing. I need to talk just a little bit about the Netflix trade that we did last week. Some of you got the full possible target profit on Netflix, and some of you saw something weird happen on Netflix, and it happened to me in one of my accounts. I had the Netflix trade from last week. I had it open in 2 different accounts. In one account, I made my full target profit because I had enough margin to cover a risk situation with Netflix. I'm gonna take an extra minute. If you weren't in the Netflix trade, or if you made your full target profit on the Netflix trade, you might want to still listen for the next 5 or 10 minutes while I explain what happened. You might not care, or you might just roll your eyes and say, "Yeah, I know this is a deal, and I know this happens from time to time." Let me tell you what happened in one of my accounts with Netflix, including I know this happened to at least a couple of our SOS members. So we did an in the money bull call spread on Netflix back on Tuesday of last week. And upon getting into the trade, Netflix immediately sold off, and it sold off pretty dramatically. Our trade was an 1195 long call and a 1200 short call. So it was basically a bull call spread, but it was in the money. When we started it, both options were in the money. The idea behind this trade, the crux of this trade, was that before the end of the week, we simply, and if you got in like I did around 410, the idea was that before the end of the week, we just needed Netflix to finish above $1,200 a share, and we would potentially make that full 90 cents difference. If the stock is trading over 1,200 at the close of the day on Friday, you automatically have to be called away on that 1,200 strike option, and your 1195 option automatically fills for you to cover you. So you're forced to sell stock. Keep in mind what your obligation is with each option instrument, what your rights and obligations are. You're now obligated to sell however many contracts you had, however many number of shares. You're obligated to sell shares of Netflix at $1,200 a share, but you have the right to buy shares of Netflix at $11.95. So however many contracts times $5 a share is what you're going to take in, minus the $4.10 you paid to be in the trade. So your net profit per share should be 90 cents. So if you divide 90 cents by $4.10, you would make 21.9% profit, 22% profit. Okay, now here's what happened to me in one of my accounts, and I know it happened to some other people. During the trading day on Friday, Netflix, a couple of times during the day, one time during the day. One time during the day, Netflix dipped down below, and Friday is actually, don't forget, Friday is right here. Netflix closed the day on Friday. They finished the trade. Now, Netflix had a big day up today, but Netflix finished the day on Friday. I don't know if you can see it here. Friday's close was $12.0465. $4.65 above $1,200 a share. So you're thinking, no problem at all. I should have made my maximum full profit. Well, if you look and see the low of the day, and I know it might be kind of small on your screen, so I'll help you out. The lowest point Netflix hit during the day was $1,198.23. Okay, not quite, maybe 50 cents off of halfway between. Here's our 1,200, and here's our 1195. There's our strike prices of our options. And one time during the day, Netflix, if this is the midway price between those, Netflix got down to about here. But most of the trading day, if you looked at a one-day chart, the majority of the trading day, Netflix was above 1,200. Even in the closing minutes, even when Netflix was in the last maybe 15, 20 minutes of trading that day, a couple of times Netflix got down to $1,201, $1,201.70, $1,201.90. So here's what happened to me in one of my accounts, and here's what happened to some other people. And it's unfortunate. It sucks. It feels unfair. I was I can't even tell you how ticked off I was about it. I mean, I was really ticked off about it. But sadly, there is nothing you can do about it. When brokers do this, they are 100% within their rights, even though, in my opinion, it is crooked. It is shameful that they would do this, and I personally think there ought to be a major penalty to these brokers when they do something like this and they end up being wrong, which was the case with Netflix. So let me explain this for you, okay? In the account that I feel like I got screwed on, I had 10 contracts, okay? 10 contracts equals 1,000 shares. Never forget that when you enter into an option contract, those contracts represent real shares of stock, or the possibility to have to buy or to have to sell or whatever. Don't ever forget that those 10 contracts in my case equaled 1,000 shares. So here's what happens. I've got the 1,200 and I've got the 1195 strike options. Imagine what would happen if Netflix finished at that low of the day, which I believe was $1,198 and some change. Okay. Imagine if Netflix would have finished at that spot. Okay. Here's what happens. My 1,200 strike short call is worth 0. In this particular trade, that's potentially a good thing. My 1195 strike option at this point in time would be worth $3 and whatever amount of change there was behind that 1198. I don't remember exactly what it was. Let's say it was 1198. Was it 83? I think I might be wrong on that. So $3.83. Okay, that would have been the value of this long call. So if I got into the trade for $4.10 and now I got 0 on this, which is okay, that expires worthless, my obligation disappears completely, but I still have an 1195 long call with an intrinsic value of 383. My broker does not automatically pay me 383. That's not what most brokers will do. In fact, I don't know of any brokers that will do that. What your broker will do is take that 1195 long call and they will exercise it on your behalf at the end of the day. When that takes place, you just bought shares of Netflix for $11.95 times however many contracts you have. Now look at my case specifically. The math on it is fairly easy. $1,195 a share times 1,000 shares of Netflix. Remember, that option contract represents 1,000 shares. That's $1.195 million, folks. That is not a small chunk of change. All of a sudden, my broker on my behalf at the close of the market is going to buy 1,000 shares of Netflix on my behalf for $1.195 million. Well, what if my account does not have $1.195 million in it? Maybe my whole account is not worth that. Maybe my whole account is worth that, but maybe my cash on hand is not worth that. So what is my broker going to do? They have a couple of choices that they can do. One of their choices is they could buy $1.195 million. Let's just say $1.2 million worth of Netflix stock. And on Monday morning at the open, my $1.195 million worth of stock would sell immediately. Immediately, they would sell it at the open of the market for whatever price the market opens at. Now, in this particular case, Netflix opened this morning at $1,201.65. So I have 1,000 shares that I bought at $1,195 a share. Netflix opens at $1,201. Let's do the exact math on this. 1,201. What did I say it was? Sorry. 1,201.65. Okay, 1,201.65 minus $1,195. I would have just made $6.65 per share. I would have made $6.65 per share times 1,000 shares. 6,000, that should be common. Let me fix that. $6,650 would have been my net profit. And remember, my net profit before this would have only been 90 cents. Okay, that's not net profit. I would have taken in $6,650 a share minus the $4,100. Remember I paid $4.10 to originally get into this trade. That was my original cost to get in the trade, was $4,010. So $66.50 minus $4,010. Let me make sure I do that. $66.50 minus $4,100, sorry, would be $2,250 per share. Let's see. Sorry. $2,550 would have been my profit. And when I originally set up the trade, I set it up with a max profit that would have been about $900. I would have had more than double, almost basically close to triple my expected profit. Okay, close to triple my expected profit. Okay, so that's one choice your broker could make. Exercise my 10 contracts, buy $1.2 million worth of stock for me, and then immediately sell it at today's open. But 20 minutes before the market closed, here's what happened instead. And unfortunately, my broker has the right to do this. My broker looks at my 10 contracts of Netflix and they say, Jeffrey Dunyon does not have $1.2 million liquid in his account right now to buy those shares. So his order that's in place right now for $4.95, because I would have been happy to get out of the trade for $4.90, making only 85 cents a share. We're going to cancel that order. They don't give you any warning of this. It's in their fine print that they have the right to do this, but they give you no warning whatsoever they're going to do this. They canceled this order. And with 20 minutes left to go, they took the mid price of the trade and closed out my entire trade. At that point in time, the mid price of the spread was $3.90 per share. Okay. What really, really sucks about this is that at that time, right at that moment in time, Netflix was trading for about $1,201.90. I know this because I was watching in real time as it happened. And here's why it happened. Some pinhead, and I mean pinhead, some idiot 25-year-old with a degree in finance who has never owned or traded a stock in his life. I'm being a little bit facetious, but this is honestly what I believed happened. Some pinhead college graduate that works for my brokerage in their risk management team looked at my portfolio and said, Jeffrey Dunyon does not have enough money in his account to own $1.2 million shares of Netflix right now. And we don't know, with 20 minutes left to go in trading, we don't know if Netflix will finish above or below $1,200 a share. So rather than take that risk, we're going to cancel his $4.95 limit order to exit the trade. And we're going to put a new order in at market price. And at market price, I got filled at $3.90. Okay. And there's not a damn thing I can do about it. I have no recourse. They have no, there is nothing. They have no repercussion at all for screwing me over So instead of making with my $4.95 limit order, and multiple times during the day, the mid price was at or above that, just not long enough for me to get filled. Instead, they filled me at $3.90. And from my entry point of $4.10, what does that mean? I took a 20-cent per share loss on my trade. So not $20, 20 cents. Let me get a decimal spot in there. So 1,000 shares times 20 cents, I lost $200. But more importantly than that, I lost $850 in potential profit. My loss of $200 sucks. I was upset about it. I could live with it. It's not breaking the bank. It's not stressing me out. It's not causing my weekend to be bad. For some people, it would. For me, the $200 is not the end of the world. I hated it. I don't like losing money ever. But I took a $200 loss instead of an $850 profit, or what should have been in my other account. Here's the irony of all this. This is the irony of all this. In my other account, with about a minute and a half of trading left, with about 1 minute and 30 seconds worth of trading left in the day, my $4.95 limit order filled, and I made my $850 profit, about a 20% profit on the trade. My 85 cents divided, let's see, 0.85 divided by my $4.10 entry. I made 20.7% on the trade. 20.7% with about a minute and a half left. Because in my other account, it's a larger account and I didn't have 1.2 million liquid, but I had close enough to that in margin that they didn't exercise my trade. They didn't cancel my order and fill an order for me. And it sucks. It's a horrible, horrible thing. I know I was on Discord with one member of the program that said, unfortunately, Netflix filled. And I think he had the exact same thing happen. I think he had the exact same thing happen to him that happened to me, or something very close to it. I don't know what his fill order was, if it was $3.90 or $4.10 or $4.15. But the point I'm making is this. Here's the reason I'm sharing this all with you. Like I said, I have no recourse. My broker, in their decision to cancel my limit order and fill me at the mid price because they didn't want the risk of letting me hold 1,000 shares of Netflix over the weekend and sell them at the open. They didn't want to take that risk. Too much risk for them because I didn't have the money, the cash to cover that in one of my accounts. So they screwed me over. And what upsets me more than what they did is, and I was on the phone with one of their customer service people. I knew what the technical rules were. I just wanted to see what their customer service would say. I was on the phone with them for almost 20 minutes between the time this happened and the time the market closed. And I kept asking him, what if you are wrong? You're doing all of this. Everything you did to me at 1:39 p.m. my time, everything you did to me was based on a what if. What if Netflix finishes the trading day below $1,200 a share? Remember, it was above $1,200 for all but a couple of minutes during the middle of the trading day. And so everything they did was based solely on what if they finish below $1,200 a share. And that's what gives them the right to do what they did. And I kept asking him the question, what if you are wrong? What if you're wrong and Netflix finishes above $1,200 a share? And after this snot-nosed little piece of garbage, with expressing zero empathy and acting condescending as hell. Look, I'm not a violent person. I'm really not. If I could have reached through the phone and slapped this little snot-nosed brat at the time, I would have tried to do it. If there was some magic telephone that would have let me do it, I would have done it. not because what Netflix did or what my broker did, not because what my broker did is illegal. I think it's morally wrong. I think it's abhorrent. I think it's just absolutely wrong what they did, but they have the right to do it. I just wanted him to admit openly that the cards are stacked in their favor and there's no repercussion if they're wrong. And he finally admitted it. I said, what happens if you're wrong? And he said, well, I guess he said, well, I guess we win on that one then. And that's all I needed to hear. And it didn't really make me happier. It didn't really appease me. What happened was a crappy thing, but the reason I just spent nearly 20 minutes explaining all this is this. When you place a spread trade, don't ever forget what your rights and obligations are, and don't ever forget what your broker is allowed to do or not do. Sometimes you got to read the fine print. Sometimes you have to pay attention to what they have the right to do, because what they have the right to do is never, ever, ever, ever going to be in your favor, not theirs. It will never happen. Now, I was on the phone with a friend after all this happened, and he said, well, you should go with a smaller broker. They wouldn't do that to you. And I said, maybe they wouldn't do that to me, but they could. I guarantee it's in their fine print as well. They could do it. They have the right to do it. And just like with my broker, there is zero repercussion to them if they're wrong. If you are going to open a spread trade and you're looking at the number of contracts, you've got to account for the possibility that your worst case scenario is not that you might lose a little bit on what you paid for the trade versus where things finished or what happened after that. Your worst case scenario is that your broker could screw you over, and they will if they think there's any risk to them. And there is no repercussion. You have no ability to fight them. You have no ability to recoup anything. I'm upset about the $200 that I lost, but again, not the end of the world. I'm more upset about the $850 that was left on the table that I should have had, or if they would have exercised my short option or my long option on my behalf, the $2,550 that I would have made if I would have owned those shares over the weekend and sold them at the open this morning. So there's a lesson to be learned. Be careful. Be careful the number of contracts you do. They might not have done anything at all had I done 2, 3, 4 contracts. I wouldn't have made nearly as much money had I, on the trade at the end of the day. But the risk for them was not so much, the what happens if I have to own shares of Netflix and then sell them right at the open on Monday morning. The risk for them was it's $1.2 million worth of Netflix. You got to be really watch carefully when you're doing a stock, when you're spread trading on a stock that trades at a lot of dollars per share, because this is what can happen. So if you have any questions on this, send me an email, instant message me, or come on live tomorrow morning when we do our podcast and ask me some questions about it. All right. I went on really long about that. I hope you had a good day. I hope you had a good weekend. Hope you had a good day today. I'll be back live tomorrow about 30 minutes after the open of trading. Thanks, everyone. Bye-bye.